31. Actually, we started a whole minute late. Don't tase me, bro. All right, so we have some market action probably coming in about an hour, actually like 45 minutes. Jerome Powell's going to speak. So when you have something like that happening, when you have the member, the Fed chair, who's going to talk, everybody's going to analyze what he says, right? And every little thing he says is going to be just overanalyzed. And long story short, if he says something dovish, the dollar will go down and markets will go up. And if he says something hawkish, the opposite will happen. That's usually how it goes. These moves can be temporary. However, if you are in a trade at that time, that can either help you or hurt you. And the one thing a lot of people like to do is they like to try to gamble. And so they'll get into a trade thinking, oh, he's going to say something dovish, or, oh, he's, and then they'll go long. And then, and this can be a mistake a lot of the time, because what'll happen is the market makers know this. And so they'll thrash price around just enough to get a lot of people stopped out. And one of the things they do is they know where people's stop losses are. They have a lot of data that they pay for, and they know what the exchanges say, especially if you're running an exchange. So that this is a dangerous game, so I don't play it personally. Look, I'm gonna tell you something. If you're a trader, right, and you want to figure out an algorithm to trade the news, then go for it. I know guys that talk about, you can bracket, and they have all these different like tricks, and that's fine. There are enough news events to where that might be doable. To try to predict what is going to be said, I don't know if that's realistic, because that's just, unless you're really in some upper circles, that's probably not going to be realistic. So anyway, I'm not saying don't trade the news. I'm saying I don't trade the news, right? So we don't really give investment or, advice or anything like that. We just, here at Algo Factory, we say what we're doing. And in the meantime, since we just started the show, I'm going to go ahead and throw up a QR code. We'll talk a little bit more later about who we are, what we do, but just briefly, you can go to our website if you want to check us out, www.algofactory.tech. Okay. And then you can zap that QR code, take you straight to the website. But we'll go ahead and jump right into the content here. And I'll throw that QR code back up just a little bit longer, because I did not have it up there for very long. And I'm also going to roll over to our friendly Discord over at Rogue and put up a link for anybody who wants to join us. If you are watching this on YouTube, like, subscribe, notification bell, do some comments, even go afterwards. If you're watching this like not live, throw some comments up in YouTube. It helps out the algos, okay? All right, so about to throw that link up, and then we will start looking at charts. Look, whether you are in the YouTube chat or if you are in the Algo Factory private chat, go ahead, throw some questions out there. I think there might be some questions ready to go. Give me 1 second. Let me see. Going on to our Telegram. Just want to see if somebody had, people talking about Bitcoin. I guess I know that Be Good had a USD JPY trade, and while we were talking during the show yesterday, he was looking for a short, and I was saying, I don't know if it's going to happen. Like, the general trend was upward at that time. So, I wasn't confident that I would take a short on that. I ended up scalping out a short. However, I did get out at just the perfect time, and I did tell everybody in the room that I was out. And I said, I think what my comments were was like, hey, if there's a short, it's going to happen now. And it surely did. And then I said, and then Be Good said what his, exit was. And I'm like, I'm already out. And so I'm going to go ahead and illustrate kind of what happened there on the screen here. Let me zoom in so everybody can actually see what the values are. And then I will expand the screen. And here we go. So basically, price had come up. Be Good had done a 618 retracement. And basically what it was he took And the whole show yesterday, at least the morning show, was about retracements and how to use them, how to use this Fibonacci retracement tool. So go check that out. I even just did a clip based on the tool itself. And Be Good, I mean, he hit it just right. He wanted to do a retracement of the impulse that I'm about to illustrate with this line. So here's the impulse from here to here. So I use the fib tool to see how far back it would retrace. And the golden ratio is most of the time where it's going to retrace to and bounce. So here you'll see it. Price came up here and he shorted basically, I'm assuming, you see this 618. I'll go ahead and extend the fib out so you can, see that in relation to price. Right. So the green line here, this green, this kind of lighter green, is he shorted basically right here as price approached the 618. He shorted around this area. I'm assuming, I don't know, Be Good if you're there, go ahead and tell me what value you're in at. But I'm assuming he probably got in around here. And then the plan was to go to, let me see, his value. Let's see what it was. 149,811. He wanted to get out at 149,811. So the plan was to short from, I'm guessing, about here to about here. Okay. And remember, of course, the algos were telling me things are bullish. I didn't think it would make it that far, and surely it didn't. But these red arrows and blue arrows, you can tell where I got in and out, right? And you can see there's a couple of scalps in there that I did, but the main trade that was the more profitable trade that I took went from about here until here. Okay. So as I widen the screen out, I got in during this kind of longer orange bar. These are candle, I should say. These are 30-minute candles, by the way. So each of these candles is 30 minutes worth of price action, right? And then I got out at this, you see this blue arrow right at the bottom here, this little kind of doji right there, the spinning top doji. My algo said get out right here, and surely enough, I was wanting the price to go down, and then the price went ahead and went up. So my exit was about as perfect as it got, and I even said in the chat that I'm already out at 12:26 p.m. is my time. So right at the end of this candle is when I got out, which is pretty much close to the bottom. I mean, I could diagram that on a 5-minute chart easily to show you how precise that was. So, and again, I'm in front of the computer all day. I mean, you can build algos to help you scalp, that can be done. But the original trade that Brad wanted to do was this larger, kind of longer line here. But the trade that I took actually looked like this. I entered here in this trade, in this candle. Let me broaden this out. All right. So I entered right here at this red arrow, somewhere in this candle. My stop loss was above that. I don't know where my stop was, but it must have been above where it came out to. And then my actual take profit was lower. My take profit was a bit, probably close to where Brad's was. I was aware of this. I was worried about, not worried, but I was kind of concerned that these prior rejections to the upside, where price had come down and then come back up, that was going to create structure that was going to have to do with it might bounce, with price possibly bouncing right here, right? So oops, I think I need to undo what I just did so I don't go blind. Give me 1 second. I move a little fast with the mouse. And then when the screen zoomed in like it is, it's all distorted. So long story short, though, is that this area where that box is, that was a structural area about which I was concerned. And as price moved into profit, hit that area of structure. Honestly, the structure was there in the back of my mind. It wasn't the reason I exited. I had an algorithmic reason to exit. My algo said it's time to get out. And look, I got out on this blue arrow. This 5-minute bar right at the bottom here. And then I got this pop up. So I exited kind of in this area right here. So, again, I don't know where my stop was, You know, it might have been a little higher, but I don't think it was. Maybe, I don't know, whatever. Wherever it was, I had a nice profit, and it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So roughly an hour. It took about an hour to make that. Not bad. Not bad at all, you know, so I can't complain. And again, you know, I don't know, Brad. I don't know, or Brad. I keep saying Brad. I don't know. It'd be good if you ended up getting out. You know, if you ended up actually exiting that trade, or exiting the hard way with your stop loss. I don't know how that worked, but my signal to go long happened while I was not trading. You know, I can't look. I'm gonna tell you something. Sitting in front of the screen as much as I do, it's going to be very difficult to just get every single trade. Like, it's just going to be, you know, to try to just be ready to catch every trade is just not likely. And I was asleep when the next signal came to go long, because I was looking for longs on the JPY, and longs I got. I just, you know, you see here price continue up nicely, and looks like it's going to approach this peak here at about 151.701. So you know, this move up is just a slow, hard grind. It's pretty inorganic. Every single pullback is just getting hit hard. I mean, there was this short that we got involved in, this little quick counter trend trade. You know, what I did was I treated it as a trend trade on a lower time frame, right? So on a higher time frame, this is counter trend. The trend is up, right? Price turned back down, but when I go to a lower time frame, a little mini downtrend had been created, right? And because I'm, you know, able to, I can trade on these lower time frames. You got lower highs, lower lows, so technically a downtrend was created. So I got in at this area, and then of course algorithmically I left, and the clues were right here with the structure. I knew it was there, and maybe subconsciously it affected me, but that structure is not why I got out. It should have been why I was thinking about it, but that's not what happened. Either way, I profited, and Be Good made a good call, although I don't know if he was able to capture any profit with that call. Again, that's going to depend on whether or not he was able to exit prior to his target, which was much, much lower. So that is what happened yesterday. That is an explanation of the trade. And, you know, I hope that was helpful. It's just kind of, for a lot of new traders, this is the beginner live lab. For a lot of new traders, this kind of stuff can be helpful. You know, it can be good to get the play-by-play and get the feel for a trade and what that looks like, right? Brad asks if I can have a look at the euro. Yeah, I mean, you know, basically with the euro, I was looking at it earlier, and it's, you know, I'm not going to touch it until things calm down. So let's see here. Right now it's compressing, right? So what we're probably going to see on a higher time frame, let me go to a different chart without all my like millions of trades on there. That's not millions of trades. That was just super high time frame. So, you know, a trade or two a day can look like that. All right, so here's the euro on the daily, and right now the kind of higher time frame is bullish, but the mid time frames are bearish. So what you're getting is like a compression, more or less, not exactly a range. I'd almost want to call this like, oops. Let me panel this out really quick. Give me 1 second. Let's get as much data as we can. Yeah, so high time frame actually a little bit bearish, but flattening out. It's kind of, high time frame is like even. The relatively high time frame, like the weekly, is a bit bullish, but the daily is actually relatively bearish. So, you know, daily is a pretty strong time frame, and it's in the middle of a turnaround. So I do expect price to actually start to head down a bit, at least to possibly test this local low structure that we're seeing build. We had a bit of a range kind of created here, and price broke out of that range. So it's not the cleanest range, but it kind of looked like this. And now price is revisiting that, so this could have ended up not being a range breakout, but a deviation. And I do think price is going to hang a little bit lower. I think it's going to drop down a bit. We can look at some local structure as to where that might go. We can also do like a fib retracement. I'm not going to do it here, but the impulse for the fib retracement is going to be like that impulse right there. And I'm venturing to guess the price is going to kind of react to some of the structure, and it might coincide with the 618. So again, what happens today? I know that Powell has been dovish a little bit, like cautiously dovish, sort of, in the last meeting. Now, we don't know what he's going to say today. He might kind of change that direction, or he might look. I personally think he's going to remain cautiously dovish because I think they need to push a Santa rally. A lot of large players are down right now. A lot of large players are showing unrealized losses. And of course, it's the... Oh, excuse the yawn. Sorry about that. 4 hours of sleep is what it gets you. Well, maybe 5 hours. I actually slept a little longer today on purpose. All right, so I think the Christmas rally is going to be pushed because I think a lot of large players are losing money, and I think there needs to be some kind of shore up. When you hike the rates at a rate faster than pretty much any time in like modern history, possibly any time in Fed history, I don't know. I think so, because the rate was held down near to zero, an average of 0.3% for 12 years, 10 years. And now you're up to like 5.25 or whatever it is. That type of percentage is faster than I think anything we've ever seen in history, right? So that being the case, a lot of money got more expensive. And in the end, sure, there's a lot of derivatives going on in that kind of trading, and hedge funds are shorting, and that you can make money like that. But a lot of these large players are just holding spot like equities and things that are, you're not really making that much money on the way down compared to what you can make just by holding spot equities, right? I mean, I don't know what the what do you call it? I don't know what the proportion is to how much money are they making shorting things versus how much money are they making longing things, but I'm pretty sure their base holdings are going to be like spot equities and things like that. And probably paper based on spot equities, paper being bonds. And so when you're hiking the rates, a lot of your base, investments are just going to dry up. It's just how it is. But we had to hike the rates, right? There's a lot of theory behind that we're not going to get into. But in doing so, a lot of these companies lost a lot of money. And I think that what needs to happen now is in fact, we're going to get, hold on a minute. We're going to get the Gorilla's opinion on this right now. Gorilla, how are you, sir?
Yes. Good morning.
Good morning. How are you feeling?
I am feeling quite well, my friend. How are you?
Oh, that's good. Just we're just talking about like what we think is happening, why I think there's coming a Santa rally, why I think Powell might be having some dovish messaging today. Not that I'm going to trade based on that, but this is what I think. And what I'm saying is they raised the rates, and because they raised the rates, a lot of the investments dried up, and a lot of companies are very much underwater on their trading this year. And so I think a Santa rally is going to be pushed to kind of help shore up a lot of these companies. That's what I think.
No, that's exactly what's going to happen. I think it was I don't know if it was last week or 2 weeks ago, whatnot. I gave a drip that said that there's a key indicators that have been crossed that's signaling a Santa rally. And this is from a source from JP Morgan. I don't know if my mind is foggy, so I apologize. I don't know if I did it on a drip or somewhere else. Maybe it was a phone call. I'm not exactly sure, or a conference call. But you did
it at a bathhouse.
That was right. It was in the Lower East Side, Manhattan. I remember now. With the emphasis on Lower East.
Bathhouse intel.
This is straight from the bathhouse to the trading. I was with Barack Obama when I learned of this.
Barack and Michael. Oh jeez. All right.
But it is pointed at, in all seriousness, this was a source close to JP Morgan that's hinted at that they're prepping for a Santa rally, because you got to understand, there's a lot happening here. It wasn't just the small banks that took a bath with the bond yields that rose. Okay, it's been out there that Bank of America, sitting on 162 billion in U.S. bonds that are negative. Same thing with J.P. Morgan has that exposure of $40 billion and all these other things. Now, these are geostrategically important banks. That's going to be taken off them. And the reason why people are like making a big deal out of nothing at the end of the day is this: when it comes to the larger banks holding it, because you got to remember what happened after the 2008 financial collapse. You have to remember what happened with TARP, right? The toxic asset reallocation program, right? That during TARP, what were the larger banks required to do? They were required to hold U.S. treasuries to fluff up their books, right? While they were also using accounting gymnastics to offset the derivatives balance. So that's the reason why JPM and BOA are sitting on massive amounts of U.S. treasuries, because they're supposed to. That's going to be taken care of. Now, one of the ways that can really help this situation is a Santa rally.
There you go. There you have it. So now in this case, that means the dollar has to get weak. Okay.
Dude,
so
let me ask you a question. Is there anybody that does the technicals and fundamentals like you and I? It's like a 1-2 punch.
Yeah, I don't think there is.
It's like a Mike Tyson cross, followed by an uppercut. It's just game over, man.
Well, I'll tell you, for anybody listening to this, like after the fact, if you're not watching it now, understand that now I've been working with V here since like 2017 and listening for much, much longer. And I've gone through a lot of different like people who are calling the shots in markets, and there's not another more accurate person out there that I know personally. I'm sure there's guys out there somewhere, some obscure place, but we're not Jim Cramer over here. Like, V gets it right. The way I say it is 80% right 80% of the time. And quite frankly, in markets, you can't ask for better than that. That's just how it is. I got no reason to blow smoke. It just is what it is. That's why I work with him. That's, after listening enough times, I approached V back in like 2017. I'm like, hey man, let's do something here. And, so we started working together, and that's that. That's, and that bathhouse intel, it's just valuable stuff. It's where it is. It's where it's at.
I'm going to change it from the boardroom to the bathhouse. This is intel from the bathhouse, folks.
Oh yeah, well, there's like that time that my half brother's gay. I told you that, right? He's homosexual. He's a good guy. And so he, they're all, not everybody is like shitty. In fact, I think most people are even in that group are just like most normal people. They just wanted to do the thing, be left alone. I think it's a very loud minority who make a problem. Yep. So I think most people just want to be left alone. So anyhow, we're friends. Well, yeah, I was having lunch with Lindsey Graham's assistant, who is his friend, right? Oh, wow. And so I don't know Lindsey Graham or anybody. We're having a lunch with them, and my brother's Grindr app pinged. You know what Grindr is, right? It's like Tinder for gay people.
Yes.
It's actually Tinder was based on Grindr. Grindr came first.
Oh, okay.
So it's like, you know if somebody's in the vicinity that wants to hook up.
But pinged was actually Lindsey Graham pinging him? Is that what you're trying to say?
No. What it was we were sitting with Lindsey Graham's assistant having lunch, and my brother's Grindr app pinged, and then Lindsey Graham's assistant goes, oh, hey, Lindsey plays that video game too.
Yo!
I'm just kidding, dude. That whole story is a lie.
Oh, man.
That whole story is a lie, yo.
Oh, man. I was like, wow. Dude.
No, I'm just kidding, man. I'm kidding. So what we're talking about here is what's going to happen with the euro. And if you look on the daily, I think that I'm guessing that Powell's going to come out with something like dovish today. And so the euro is actually going to go up. But I could be wrong about that. And so we're going to look at what would naturally happen with the price. And we're going to read right now, the daily is kind of bearish, and I think it needs to like retrace a bit. I think price is going to come down a little bit on the daily. And so we're looking at how a retracement might work from a Fibonacci standpoint. And, just kind of an extension of yesterday's class. So looking at this on a higher time frame, that's your impulse, this big long line. I mean, we talked about this actually yesterday too. Your impulse could be like this, right? Now, if that's the case, the retracement is complete, but it's just according to the algos, I don't think that's the case. It doesn't look like that. I mean, it would have to be something severely, let me see, euro down, dollar down. It would have to be something severely like, what's the term? I think that for the euro to go down, the dollar has to go up. And God, dude, I'm trying to measure like what Powell would say to cause price to turn around and head up, and that's dovish. So it would be something pretty darn dovish to cause price to reverse and head up in this, right? So, it might be kind of a mile. Long story short, I can only measure like the fib for this, and what Powell does is going to kind of affect maybe whether or not this happens. But the 618 is right here. Like, this is the 618, and price wants probably to go to this level. In fact, there's a lot of price action right here, so I can almost guarantee you that that the point of control is just above this, and we're going to do a fixed range volume profile just to see if that's the case. So I'm just looking at what price would want to do naturally. I'm not looking at like what might happen with the news, right? Because then my brain starts to break after 4.5 hours of sleep. And all right, so here we go. There it is. Just like I said, the point of control is like right up here. So I do think price it's already past this gap. Price has already made it past this area that's going to be hard to pass. It's like right at the bottom of it. So yeah, if Powell comes dovish, like hard dovish, then yeah, price could turn around and flip back up. It's at the 382 right now. It's at the bottom of the gap. Everything could turn up, but the algos want price to continue down. So I do think that whatever happens today, maybe there's a temporary move up if he's dovish, and then price like heads down. Now, if he is not so dovish, if he's neutral or hawkish, then price could actually easily jaunt down to here. Because right now the algos wanted to go down on the daily, right? But on the higher time frame, it's a different story. On like the weekly, everything's bullish, right? So if you were to zoom out, like look again, just so you can see the euro here, because this is for Brad. This is what I think will happen at some point. It just depends on what happens today, whether or not Powell says something strong or weak and that kind of stuff. So this is my, if there were no Powell talking, I would look at price coming down to here. That's what I look at. Okay. In fact, the way I trade it would probably be to look for, let's get rid of some of this noise. The way I would trade this. So we're almost done here with the free deal. But you can see that the support is like right here. Okay. And so if price broke below that, the way I probably would trade this, depending on whether or not my algo say it's okay, if like whatever happened here and then price broke below, I probably would look for a bearish retest and then short that. That's probably how I would do it. But again, it's just, it's going to depend on what happens. So, but if Powell doesn't say anything powerful, then it's probably going to look something like this. Might go a little bit higher before it goes down. We'll see. All right. Well, we are now at the end of the free live lab, the free to the public beginner live lab. I hope this was helpful. I tried to keep it to language that beginners can understand, but if you look at the screen here, there is the QR code. You can zap that, take you straight to our website, or just go to the website. It's written right there, www.algofactory.tech. Gorilla, can you give us that send off?
Absolutely. Listen, guys, don't sit there and let money go pass you by. Join us, algofactory.tech. You listen, especially now with everything that's happening in the world, you need to position yourself in a way that you can leverage the situation rather than being a victim of the situation or being victimized and molested by the situation of the global events and the economic events. Learn to leverage it. Learn how to do a judo move and twist it in your favor. Join us, algofactory.tech.